Yes. Hello everyone. So in today's lecture we are going to discuss about bank reconciliation statement. So before we start discussing about this particular topic, I just want to explain some basics of accounts. How transactions are recorded in the books of accounts. Some basics I'm going to explain and then we are going to start with the chapter. Now see listen. First thing, whenever we do accounts, we always think from business point of view. The first important thing is you should always think from business point of view. Now, entire accounts consist of five terms. Five things are most important in accounts, and we do recording of these five things only in accounts. What all those five things are? Asset, expense, income, liability, and capital. So any kind of business transaction you take, in that five, you're going to find only these five things in that every transaction you take: asset, expense, income, liability, or capital. Now, what will happen? Because of any kind of business transaction, out of these five things, any of these five things, either they will be increasing or they will be decreasing. Either they will be increasing or they will be decreasing. Now, how do we need to record what has got increased and what has got decreased? If anything has got increased or decreased, how do we need to record in books of accounts? Now, the rule is that whenever asset or expenses increases, whenever let it be asset or expense, when it increase, we are supposed to do debit. Asset expense increases, we do debit. But whenever income, liability, or capital is getting increased, then we are going to do credit. So for asset expense, the rule is same. It increases, we do debit. Decreases, we do credit. So if it decrease, then what we should do? Credit. Ulta. Reverse of what we have done earlier. So for increase, if you have done debit, so for decrease, we'll do credit. Next, income, liability, and capital. Now for these three things, if it increases, we do credit. But if they decrease, we are going to do which one? Debit. So you just remember this much. Asset expense increase, we do debit. Income, liability, capital increase, we do credit. If it decreases, then you need to do reverse. I hope these basics are clear to you. Okay. Now we'll get into the chapter. Now we'll discuss about the chapter bank reconciliation statement. Now, so in this BRS chapter, there are some basic things which we need to understand. So once your basics are clear, then we could be able to do this chapter very easily. So let me start with the basics one by one. Okay, understand. Cash are of two types. There are two types of cash are there. One is called as cash in hand and the other one is called as cash at bank. Cash in hand means the money which belongs to the business and kept at the business place. The money which belongs to the business, and if you are kept at business place only, then it is going to be called as cash in hand. Suppose if the money belongs to business, but if you are kept at bank place, if the money belongs to the business, but if you are kept at bank place, then it is going to be called as cash at bank. So cash in hand means cash kept at business place or cash kept in the office place of the business or in the cash box of the business is cash in hand, and the other one is going to be called as cash at bank, which is kept at the bank. So cash in hand we can call it as cash balance, and cash at bank we are going to call it as bank balance. Now most important thing, listen. Whenever we discuss this chapter, we are discussing only and only about bank balance. The full chapter is only about one thing, that is bank balance. We are not going to discuss anything about cash balance. We are going to discuss the entire chapter only with respect to bank balance, that is cash at bank. Now understand, whenever our bank balance, whenever the business bank balance is going to increase or it decreases, whenever the changes will happen in the bank balance, they are being recorded at two places. Every banking transactions are going to be recorded at two places. One in the books of business. One we record in the books of business. Business is going to record all the banking transactions in a book that is called as cash book. In a book that is called as cash book. So in cash book, no, you have multiple columns: cash column, bank column, discount column on debit side, and again on credit side the same thing: cash column, bank column, discount column. So as I told you, every banking transaction in the books of business, it is being recorded in which book? Cash book. In cash book, particularly, specifically in bank column. So you have cash column, you have bank column, and you have discount column in the cash book. So all banking transactions or any transaction which is relating to bank balance, it is recorded in cash book. Which column? Bank column. And all kind of banking transaction what we have done through bank, even bank is going to maintain a record of it. Even in the books of bank, all banking transactions are recorded. And if we request to the bank, if we ask the bank, give a copy of accounts maintained by you, whatever the banking transactions are maintained in the books of bank, if we ask them a copy of it, they are going to give a copy of that. So a copy of our account, customer's account. Customer's account means business which has opened the account in the bank. Our account which is opened in the bank. So a copy of our account which is maintained in the books of bank is going to be given by the bank to us, and that is going to be called as passbook, or you can say bank statement. So whatever the accounts bank has maintained in its book, a copy of that will be given to us. That is called as passbook, or you can say bank statement. So I hope the first point is clear to you. Cash are of two types: cash in and cash at bank. The full discussion in this chapter is only about cash at bank. Cash at bank can also be called as which one? Bank balance. And every transaction what we have done through bank is going to be recorded at two places. One in the books of business, that is in cash book. In cash book, particularly which column? Bank column. And even it is maintained in the books of which one? Bank. So whatever the accounts, whatever the customer account which is maintained in the books of bank, or whatever our account is maintained in the books of bank, a copy of that will be given to us. That is called as passbook, or you can say bank statement. Yes. Now see the format. Format of cash book and format of passbook. Sir, who is going to prepare cash book? Cash book is going to be prepared by the whom? Business. The records of cash books are being maintained by the business. And the records of passbook is being maintained by the whom? Bank. Now first you try to understand the format, and then I will tell you that how things are recorded, how transactions are recorded in cash book as well as passbook. Now see, just one line you should understand. Cash book is like an asset for us. Cash book is like an asset for the business. But passbook is like a liability for the bank. For business, cash book is like an asset. But for bank, passbook is like a liability. Now, first you understand why it is like this. Suppose I deposited 2 lakh rupees into bank account. I opened a bank account and I have deposited 2 lakh rupees into bank account. So my bank balance is 2 lakhs. For me, bank balance is an asset. Why? Because I have a right to recover the money. I have a right to receive the money from the bank. 2 lakh rupees. The money which I deposit into bank account, that is my money. In future, I will get that money from the bank. That I have a right to receive that money from the bank. For me, it's an asset. But for bank, the 2 lakh rupees is an obligation to pay in future. Bank is having an obligation to pay that 2 lakh rupees to me in future. So bank balance for me it is an asset, but for bank it's a liability. So bank balance for business it is an asset, and for bank it's a liability. So once you understand these two things, now it will be easy to record the transactions. Now listen. As we discussed, whenever asset increases, we do debit. So whenever asset increases, bank balance is an asset for business. So whenever bank balance increases, we do debit. So whenever our bank balance is increasing, in cash book we do debit. But whenever bank balance decreases, we do credit. Because rule of asset is what? Asset increases debit, asset decreases credit. That is the reason in cash book, debit side is called as receipts. Receipts means when money enters into bank account, we call it as receipts. But when money goes out of the bank account, we call it as payment. So whenever you are receiving the money in your bank account, we call it as receipt. Whenever money is going out of your bank account, we call it as payment. So asset increases, we do debit. Asset decreases, we do which one? Credit. So credit side is called as payment side and debit side is called as receipts. So I'll just write it down here. Whenever bank balance increase, you write on the debit side. Debit side means receipt side. But whenever the bank balance is decreasing, you write on the payment side. That is credit side. But this is going to become ulta, reverse, when you talk about passbook. Because passbook is a liability for the which one? Bank, and bank is going to maintain the passbook. The records maintained in passbook is by bank. So passbook, you need to think from bank point of view. It's a liability for the bank. Now what the liability rule says? Whenever liability increases, we need to do credit. But whenever liability decreases, we need to do debit. So whenever your liability is increasing, you do credit. But whenever your liability is decreasing, you should do which one? Debit. Now listen. Whenever you deposit more and more money into bank account, whenever you are depositing more and more money into which account? Bank account, then what will happen? Bank balance increases. So whenever you deposit more and more money into bank account, the bank balance increases. If bank balance increases, for bank liability is increasing. For bank liability is increasing, and liability increases, what we do? Credit. But whenever you withdraw the money from the bank account, bank balance decreases. Whenever you are going to withdraw the money from bank account, bank balance decreases. Once bank balance decrease, liability will decrease for the bank, and liability decreases, what we do? Debit. So that is the reason credit column is called as deposits in passbook, because when you deposit, bank balance increases, liability increases. Debit column is called as what? Withdrawal. When you withdraw the money, bank balance decreases, liability decreases, we do debit. So by this you have understood that what conclusion we can get out of this is, whenever bank balance increases, we do debit, because asset increases debit. But bank people will do credit, because for them it's a liability. Liability increases credit. So what we write on debit side of cash book, bank column, I'm talking only about bank column in this chapter. So whenever bank balance increases, we write on debit side in the bank column, and in passbook it is written on the which one? Credit side. So it means that whatever we write on debit side in cash book, that will appear in the credit side of passbook. Debit entries of cash book will be equivalent to credit entries of passbook, and credit of cash book, what we record on credit side, passbook is going to record that on debit side. Yes. So now see, you have understood this method of recording banking transactions. Method of recording banking transactions. So cash book, we are talking only about which column? Bank column. It's like an asset for us. Asset increases, bank balance increases, asset increases, we do debit. Bank balance decreases, asset decreases, we do credit. But for passbook, we need to think from liability point of view. Bank balance increases, liability increases, we do credit. Bank balance decreases, liability decreases, we do debit. So I hope you have understood this, how to record banking transactions in cash book and in passbook. Okay, now few more things are there. Debit balance, credit balance. First, you understand the meaning of debit balance. What do you mean by debit balance and what do you mean by credit balance? Based on that, I'm going to explain one, two, three, four things. Okay. So listen. Let us say you are preparing one ledger account. Debit side, credit side. Let us say debit total is 1 lakh. Credit total is 80,000. So you are preparing an account, any account let it be. In debit side, you see there are so many things are there on the debit side, so many items are there, so many amounts are there on debit side. Total comes to 1 lakh. So many items are there on the credit side, the total of that comes to 80,000. Now when you do the balancing of this account, I hope you know what do you mean by balancing of an account. Finding out the difference of debit and credit side is called as balancing. So whenever you do the balancing of an account, what you will do, first you will say, first you will check, first you will find out that which total is greater. So I know that here debit total is greater. Same amount you are going to write on both the side, 1 lakh and 1 lakh. Now 1 lakh minus 80,000, difference is how much? 20,000. So here we write by balance carried on, balance, and how much balance we are going to write? 20,000. Now important to understand, this balance is called as debit balance. Debit balance means debit total is greater than credit total. When your debit total is greater than the credit total, debit total 1 lakh, credit total 80,000, so difference 20,000 is called as balance. Difference of debit and credit is called as balance. And this is which balance? Debit balance. So whenever they say debit balance, you need to understand that what debit side is more than the credit side. So this is called as debit balance. Suppose if I take one more example, let us say credit total is 1 lakh, debit total is 70,000. Then here also we write 1 lakh, here also we are going to write 1 lakh. Then we'll write here balance carried on, 1 lakh minus 70, 30. Now this 30,000 is going to be called as credit balance, because credit total is greater than debit total. Debit balance means debit total is more. Credit balance means credit total is more. So when credit total is more than debit total, we call it as credit balance. Yes. So I hope you have understood what do you mean by debit balance and what do you mean by credit balance. Now, now understand these four things. One, two, three, four. All this discussion we are doing from business point of view. All these 4 points discussion I'm doing only and only from business point of view, not from bank point of view, only from business point of view. Okay. Now understand favorable and unfavorable bank balance. First, you understand what you mean favorable bank balance. Favorable bank balance means our money is available in the bank account. Our bank balance is available in the bank account. Let's say I have 2 lakh rupees bank balance available. This is favorable because I have to get the 2 lakh rupees from the bank. Now understand what do you mean by unfavorable bank balance. Unfavorable bank balance means it's a bank overdraft. Bank overdraft. It's like a loan which I've taken from the bank and which I need to repay it back. The money which I need to pay it to the bank, it's called as unfavorable bank balance. It's a bank overdraft. See, there are two types of bank accounts are there. One is called as savings account. See, savings account is being opened for personal purpose and all. Let's say if you do any shopping, Google Pay, Phone Pay, payment and all those things. If you're not doing any business and all, if you're a salaried person or if you're a self-employed person or something, if you're not doing any kind of business, then you're going to open a savings account. But if you are doing the business, then compulsory you need to open current account. So current account is compulsory if you are doing the which one business, because in current account number of transactions are unlimited. You can do any number of transactions in a day in current account, because in business any number of transaction can happen in a day. But that is not possible in case of savings account. In savings account number of transactions are limited. So whenever you do business, you cannot open savings account because number of transactions are limited. You have to open which account? Current account. Now what will happen? In case of current account, bank will give a facility to the customer, to the account holders. That facility is called as bank overdraft. Bank overdraft means, let us say you have 2 lakh rupees in your bank account. And let us say you have to make a payment of rupees 3 lakh. You have only 2 lakh rupees in your bank account. Let us you have to make a payment to someone of rupees 3 lakh. You can do it. Bank says that even you have only just 2 lakh rupees available in your bank account, you can make even a payment more than that. Let's say you have made 3 lakh rupees payment. Then what will happen? You have done excess payment of 1 lakh. You have 2 lakh, but you have done payment of 3 lakh. So excess 1 lakh rupees, that payment what you have done, that's kind of a loan you have taken from the bank. You have to repay it in future. That is called as bank overdraft. So that 1 lakh rupees is called as bank overdraft, which is unfavorable balance. Yes. So there are two types of balance are there, favorable and which one? Unfavorable. Now listen. Now we are going to discuss about these four things. In these four things, you have to tell me in which case it is a favorable bank balance and in which case it is an unfavorable bank balance. Favorable and unfavorable. See, listen. Let us say suppose question is given like this. Cash book shows debit balance rupees 80,000. Let's say question is given like this. Cash book shows debit balance rupees 80,000. See, we know that debit balance means debit total is greater than credit total. And in cash book debit side, we write receipts. And credit side, we write payment. So, whenever the receipts are greater than the payment, money came into bank account is more. Let's say 2,80,000 rupees came into bank account. And payment we have done is only 2 lakh. Then this difference of 80,000 rupees is called as favorable balance. favorable. Our money is available in the bank account, 80,000. So whenever they say cash book shows debit balance of any amount, let it be, then it is called as which balance? Favorable. Shortcut way how to remember? Debit balance means debit side is more. Debit is more means what? Receipts are more. If receipts are more, it is favorable. Suppose if payments are more, then it's unfavorable. Simple. Receipts are more favorable. Payments are more unfavorable. So how do we remember? If receipts are more, then it will be favorable. Suppose if payments are more, then it will be unfavorable. Or you can say bank OD, overdraft. Suppose if they say deposits are more, money deposited into bank account is more, withdrawal is less, but deposits are more, then also it is favorable. Receipts are more, deposits are more, like similar only. Money deposited is more, then it's favorable. Suppose if they say withdrawal is more, then it's unfavorable. Or you can say bank overdraft. Withdrawal is something like a payment. If payment is more or withdrawal is more, it is unfavorable. But if receipts or deposits are more, then it is called as favorable. So now you can understand easily when we can call it as favorable balance, when we can call it as unfavorable balance. So cash book debit balance. Debit balance means debit side is more. Debit side is more means what? Receipts are more. If receipts are more, it is favorable balance. Next, cash book credit balance. Credit balance means credit side is more. In cash book credit side, we write payment. Payment is more. If payment is more, it's an unfavorable balance, overdraft balance. Next, let us say they given passbook credit balance. Passbook credit balance. Credit balance means what? Credit total is more. Credit total more means what is more? Deposits are more. So credit is more means what? Deposits are more. Deposits more means it is called as which balance? Favorable balance. If you deposit more and more money into bank account, your bank balance will increase. Withdrawals are less, but deposits are more favorable. Suppose if they say passbook show debit balance. So you know that in debit side of the which one passbook we write withdrawal. Debit balance means debit is more. Debit is more means what? Debit side we write withdrawals. If withdrawals are more, then it is called as which balance? Unfavorable balance, or we can say overdraft. So passbook debit side we write withdrawals. Withdrawals are more means unfavorable or overdraft. Credit side we write deposits. So credit balance means credit total more. Deposits are more. Deposits are more than it is favorable balance. So all these four discussion we have done from whose point of view? Business point of view. So whatever these basics I'm discussing, these are most important. When you do the question, all these things are going to come in the question. So you have to understand all these things. Then only you will be able to do the question easily. Yes. So now I will discuss with you meaning of BRS, Bank Reconciliation Statement. Now we are coming to the actual topic, meaning of BRS. Okay. Now listen. As I mentioned you, banking transactions are recorded in cash book, particularly which column? Bank column. And even we record in which book? Passbook. Okay. Now understand one thing. Whatever the transactions you're recording in cash book bank column, same things are going to be recorded in passbook. Only difference is what you record in debit, here it is recording credit, or what you record here credit, it is recorded here debit. But otherwise all entries are going to be same, amounts are going to be same. Now listen, if you have a bank account, if you are running some business and if you have a bank account, it is always advisable to check the entries of cash book and passbook on regular intervals, at regular time period, every 2 days or every week or every 10 days or every 15 days or every month. You keep on checking. You please check the entries of cash book and passbook and check, are they tallying or not tallying. Now, why you need to check the entries of cash book and passbook on regular intervals? I'll tell you the reason for that. But you have to check the entries of cash book and passbook on regular intervals. Now listen the reason why you have to do like this. Assume that you have given 1 lakh rupees to your cashier. Just one example. And you told to your cashier that, sir, this 1 lakh rupees you go to the bank and deposit into the bank account. But before the cashier will go to the which one bank and deposit this 1 lakh rupees, first he has to do entry in the cash book. First, cashier has to do his duty. What is duty? Is to maintain the cash book. First, you do the entry in the which one? Cash book. So, what the cashier will do? He will go to the cash book, bank column, receipt side, and he will write plus 1 lakh rupees. It means in the bank balance, he's going to do plus 1 lakh rupees. He's going to do this in which book? Cash book. Why he'll do plus 1 lakh? Because when he deposit the money, bank balance will increases. Bank balance increases, we do plus. Bank balance decreases, we do minus. Because you're depositing the money, you will do plus 1 lakh rupees in your cash book. Let us say in your cash book, already 3 lakh rupees was available. In your cash book, as per your cash book, the bank balance was available 3 lakh plus 1 lakh. So the bank balance is going to become 4 lakh. Now cashier went to the bank. Let's say in passbook also there is a bank balance of rupees 3 lakh. Cash book is also showing 3 lakh and passbook is also showing 3 lakh. Now what the cashier has done, instead of depositing 1 lakh rupees into bank account, let us say he has deposited only 70,000. He has done fraud. 30,000 rupees he kept in the pocket only, personal pocket. He done the fraud. Now in out of this 1 lakh rupees, he has deposited only how much amount? 70. Now if you see the passbook, it will show only 3,70,000 rupees balance. Here the entry we have done for 1 lakh, but here the entry in the passbook will come only for 70,000. So it's a fraud done by the which one? Cashier. So on regular intervals, if you keep on checking the entries of cash book and passbook, then you will come to know that if any fraud is being done by the cashier or accountant of the company. So it is always advisable that what? You have to check the entries of cash book and passbook on regular intervals. Whenever you find any differences in the entries, try to find out the reason why the difference is happening. So because of this, what will happen? You will be able to detect, you will be able to identify if any fraud is being done. So this is one of the reason. One more reason. On regular intervals, if you keep on checking the entries, then what will happen? No employees, no cashier or no accountant will try to do any kind of fraud. Why? Because he will be afraid. He know in his mind that what? Owner will be keep on checking the entries on regular interval. If I do any fraud, he will detect it. He will identify it. And it will be a problem for that person. Yes. So next, what else reason is? if any errors are done, let us say you have done some errors in recording the entries in cash book, or bank has done some error in recording the entries in passbook, that also can be identified if you keep on checking the entries on regular intervals. So these are the benefit why you have to check the entries of cash book and passbook on regular intervals. Now listen, whenever you come to know that entries of cash book and entries of passbook are not tallying, entries of cash book and entries of passbook are not tallying, then you take one sheet of paper and you write the heading in that paper as bank reconciliation statement. Statement means a sheet of paper, where we are going to write the reasons why the bank balance as per cash book is not tallying as per the bank balance of the passbook. So here bank balance is 4 lakh, here bank balance is 3,70,000. So there is a difference in the bank balance. Why that difference happened? Because there is a difference in the entry recorded. So what all reasons are there? This 4 lakh is not tallying with this 3,70,000. That all you write it in a sheet of paper, and name of that paper is going to be called as BRS, Bank Reconciliation Statement. Bank Reconciliation Statement is just a statement prepared to find out the reasons why cash book balance is not tallying. Bank balance as per cash book is not tallying with the bank balance as per passbook. Okay, one more line you understand. BRS is not a part of your regular books of accounts. BRS is not about recording of transactions. It is not recorded in your main books of accounts. It's not like for BRS we do any journal entries and we record it in the books of accounts. We prepare BRS only for our satisfaction. Why our cash book balance is not tallying with passbook? You just think like that. BRS is like a rough statement. It's a rough statement you have prepared. Whenever if someone is asking you why these two balances are not tallying, you could be able to tell. You give that sheet of paper to him. He will understand. These all reasons are there why cash book is not tallying with passbook. So be clear, if they say that is that BRS is a part of your main books of accounts, no, it's not a part of your main books of accounts. It is not going to come in the process of recording the transaction. It doesn't come in the process of accounting, in the cycle of accounting. It is just a rough statement which is prepared to know the reasons why cash book balance is not tallying with passbook. So I hope you have understood why do we prepare the which one? BRS. Now understand why balances will not tally. Cash book balance, why it will not tally with the passbook balance? What is the reason for that? So we are talking about balances differ due to the following reasons. So causes of difference in the balance of passbook and which one cash book. So whenever you find your cash book balance is not tallying with the which one passbook balance, broadly there are two reasons are there. Mainly there are two reasons are there. One is called as timing difference. One is called as which difference? Timing difference. And other is due to error in recording the entries. You made some error in recording the entries in cash book, or you made some error in recording the entries in the passbook. Bank made some error in recording the entry in passbook, or you made some error in recording the entries in the cash book, or in both the books some errors are being done. Then also your cash book balance will not tally with passbook balance. So we broadly classify the reasons into two categories. One is due to timing reason and next one is due to which one? Error. Error in recording the entries. Error in recording the entries. Now understand what do you mean by this timing difference. Timing difference means same transaction is exactly the same. One single transaction is there, but it is recorded on different date in cash book and different date in passbook. Let's say in cash book it is recorded on 28th March That's in passbook it is recorded on 5th April. Transaction is same, amount is same, single transaction, but date is not same. Date of recording is not same. There is a difference in timing, difference in the date of recording, timing of recording. Yes. So assume that there is one particular transaction. You recorded in cash book on 28th March, but same thing recorded in passbook on 5th April by the bank. Now assume that suppose if your year end date is 31st March, your year end date is 31st March, and that day you see how much bank balance is there in cash book and how much bank balance is there as per the passbook, then obviously what will happen, this bank balance will not tally. So on 31st March, this bank balance will not tally. Why? Because till 31st March, entry is recorded in cash book, but entry is not recorded in the which one passbook. So till 31st March, there is no entry in passbook because passbook though recorded on 5th April. But till 31st March, you will find entry in the which one cash book. So entry recorded in one book, but entry not recorded in the which one other book. Then obviously on that day, these two balances will not tally. So there are broadly two reasons are there. There are broadly two reasons are there why your balance of passbook and cash book are not going to tally. One is due to timing difference, and next one is due to which one, error in recording the entries. Yes. So now we'll discuss some of the examples. So whenever your cash book balance is not tallying with the passbook balance, bank balance as per cash book is not tallying as per bank balance of passbook, then what may be the reason why they are not tallying? Some of the examples we are going to understand. These examples are going to be most important because when you do the question, the same things are going to be repeated in the question. Okay, now listen. When you understand all these differences, all these examples for difference in cash book and passbook balance, whenever you read the statement or whenever you read the reason, for every reason, you have to try to understand where the transaction is recorded. For all these things, you need to understand two things because this will help you to do the practical questions. What two things? Where the transaction is recorded. Is it recorded in cash book or is it recorded in passbook? Or is it recorded in both the books? You try to find that by reading the statement. Then, wherever it is recorded, let us say it's recorded in the cash book. When they record in the cash book, have they done plus in the bank balance or minus in the bank balance? That also you need to find out. Have they done plus or have they done minus? Or if it is recorded in passbook, then try to find out have they done plus in passbook bank balance or have they done minus in the bank balance of passbook. So two things, where the transaction is recorded, first point. Second, wherever it is recorded, let it be cash book or passbook, so there in the bank balance have they done plus or have they done minus, that you need to find out. Second thing. Okay, now listen, before I start I'll just make you aware about two terms. One is called as check issued, check drawn, check issued. Whenever you want to make the payment to someone, let us say I want to pay 20,000 rupees to you. Whenever I have to make some payments to other person, I have to draw the check, I have to write the check, and I have to issue it, I have to give it. So checks are being drawn, checks are being issued for the purpose of payment. For the purpose of payment. So whenever you want to make the payment to someone, you are supposed to draw the check. Suppose you are supposed to issue the check. Next, check deposited. Check deposited. check deposited is for receiving the money, receipt. Let us say I have to receive the money from you. So if I have to receive the money from you, you will issue the check. You will give the check to me. You will draw the check and you will give it to me. That check I am going to deposit into my bank account. That check I am going to deposit into my bank account. My bank will send the check to your bank. My bank will tell to your bank that, sir, one of your account holder has issued a check. One of your account holder has told that to make the payment. So you have to make the payment. Your account holder has to make the payment to me. So what my bank will do, my bank will present the check to your bank for payment. And once they present the check to your bank for payment, your bank has to give the money to my bank. So from your bank balance, it will become minus. From my bank balance, in my bank balance, it will become plus. So we deposit the check to receive the money. Checks are deposited for receiving the money. Checks are issued for making the payment. So you are issuing the check, you are making the payment. So in your bank balance, it will become minus. So once I receive the check, I deposit the check. Once I deposit the check, my bank will present the check to your bank for payment, and your bank has to do the payment to my bank. So my bank will receive the money and my bank balance will increase. Check deposited, money received, receipts, bank balance will increase. So first thing is what? Checks are issued or checks are drawn for the purpose of payment, and checks are going to be deposited for receipt. Now listen, this example we'll understand one by one. So understand first point number 1. See what is the heading is sum of the items that frequently causes a difference. Some common examples which frequently cause a difference in the balance of cash book and passbook. First point, checks issued but not presented for payment. Let us say I have to make a payment of 30,000 rupees to you. If I have to make a payment of 30,000 rupees to you, I have to issue the check. I have to issue the check. Now let us say, for example, on 29th March, I've issued the check. I've drawn a check, in that I've written that 30,000 rupees and I've signed on it and I've written your name. The day when I'm going to issue the check, first I will do my duty. Means first I'm going to record in my cash book. Whenever you issue the check, checks are issued for the purpose of payment. First you do your duty. First you do your duty. What is your duty? Is to record the transaction in cash book. So the day when I'm going to issue the check, first immediately I'm going to do the entry in cash book on 29th March. And sir, when you record this check issued in cash book, how you are going to record? Are you going to do plus in the bank balance or minus? Obviously, I'm going to do minus. I'm going to do minus in the cash book because checks are issued for the purpose of payment. Okay. Now I've given the check to you people. Now you people have deposited the check into your bank. Your bank will present the check to my bank for payment. So for all these things to happen, some time will be consumed. Some days are going to get over. So I've issued the check, you took the check, you deposit to bank account, your bank will present the check to my bank for payment, and let's say my bank has done the payment. 30,000 payment my bank has done. And let us say my bank has done the payment on 5th April. My bank has done the payment on 5th April. So my bank, my passbook entry will come on 5th April. So my bank is going to do the entry in passbook on 5th April, the day when they have made the payment of the check. So I too recorded the entry on the date of issue of check. Once I issued the check, I done the entry in the cash book. That check went to you. You deposit to bank account. Your bank has presented the check to my bank. My bank made the payment, and my bank made the payment on 5th April. So entry will be found in passbook on 5th April. Now you can observe here there is a timing difference in recording same 30,000 rupees. Transaction is same 30,000, but timing is different. What are the example you have taken? 30,000 rupees of check issued, or whatever the amount you have taken. So I recorded on 29th March, but bank recorded on 5th April. So suppose if you check cash book and passbook on 31st March, between these two dates, 31st March, if you see the which one cash book and passbook entries, if you compare, they are not going to tally. Entries will not tally. Cash book, passbook balance will not tally. And this is called as timing difference. On two different timing, the same transaction is being recorded on two different date, on two different timing. So listen, check issued. The day when I issue the check, I told that first you do the entry in cash book, but not presented for payment. But not presented for payment. I issued the check. The day when I issued the check, I done the entry in cash book minus. Checks are issued for payments are done minus. But my passbook has not done any entry. Sir, how do you know that my passbook has not done any entry? Because check is not presented for payment. When your bank will give the check to my bank, when your bank will present the check to my bank for payment, then only my bank will make the payment. Your bank has not yet given the check to my bank for payment. So if they have not presented the check for payment, obviously my bank has not done the entry, has not done the payment, have not done the entry in passbook. So it means that when you read this point number 1, you'll understand that the entry is done only in the cash book. There is no entry in passbook. Entry is there only in cash book. And in cash book, they have done minus. So how do you know the entry is there in cash book? By seeing this wording, check issued. The day when we issue the check, first we do the entry in cash book. So how do you know there is no entry in passbook? By seeing this one, not presented for payment. Check is not being presented to my bank for payment. No payment done by my bank. My bank has not done payment, so no entry in passbook. See, whenever you want to find where the entry is being recorded, then you should know timing of recording. Who will record the transaction, what point of time? If you know the timing of recording of transaction, then easily you can find out where the entry is recorded and where it is not recorded. So timing of recording. Whenever the check is issued, immediately entry will come in cash book. When check is issued, entry will come in cash book. But sir, when passbook will do the entry? Only when the payment is made by the bank. And when the payment is going to be made by the bank? When check is presented for payment. When check is presented for payment, then my bank will do the payment. So in this case, check is not presented for payment. So no payment made by the bank. So no entry is there in which book? Passbook. But entry is there in cash book. So I hope this point number 1 is clear. Now understand point number 2. Checks deposited with the bank. Checks deposited with the bank but not cleared. Now let us say I have to receive 150,000 rupees from you. So you will issue the check to me and I'm going to receive the check. Once I get the check, I'm going to deposit into my bank account. Before I go to bank and deposit the check, first I will do my duty. My duty is to do the entry in cash book. Before I go to the bank and deposit the check, first I will do the entry in which book? Cash book. And I will deposit the check into which account? Bank account. So on the date of depositing the check, you will do the entry in which book? Cash book. And in cash book, I will do plus in the bank balance. Why we do plus? Because whenever you deposit the check, we deposit the check for receiving the money. Whenever you receive the money into bank account, your bank balance will increase. So increase means we do plus. Let's say I've deposited check into my bank account. Let us say my bank has not yet received the money on that particular check. My bank has not yet received the money on that particular check. So after 1 or 2 days, I went to the bank and I told to the bank manager, sir, I have deposited the check 1-2 days before, but still I have not received the money into my bank account. Then bank manager will tell, sir, your check is not yet cleared. Your check is not yet being credited. You have not yet received the money into your bank account. So that's the reason you are not finding the amount in your passbook. No entries there in passbook because check is not yet cleared. Okay. Now understand why they use this word called as cleared. Actually, what will happen once I deposit the check into my bank account, my bank will send this check to clearing house. My bank will send this check to the which one? Clearing house. To clear the check, to receive the money on that particular check. So what will happen between my bank and your bank? In middle there will be a agency called as clearing house, whose work is to do the clearing of the check. So my bank manager will tell that, sir, your check is being sent to clearing house, but check is not yet being cleared. That's the reason you have not received the money in your passbook or in your bank account. So you have to wait for it. Yes. So the day when I deposit the check, I know that I do the entry in which book? Cash book, and I do plus. But there is no entry in which book? Passbook, because check is not yet cleared, not yet credited, or not yet cleared. So what do you mean by credited? In passbook, credited means deposit. Credit side we write deposit. In passbook, debit side we write withdrawals. So whenever I say that what your passbook is not credited, it means they have not yet done plus in the passbook. Credited means deposit plus. Debited means withdrawal minus. So when they say passbook is credited, it means they have done plus in the bank balance. Passbook debited, it means they have done minus in the bank balance. So in the question, either they give like this: check deposited with the bank but not yet cleared or not yet credited. So where the entry is recorded only in cash book and they're done plus. Now this same example. Let us say I deposited the check on 29th March. The day when I deposit the check, I do the entry in cash book. And in cash book, what I'll do? CB plus. The day when I deposit check, I do the entry in the which one? Cash book on 29th March. That's why my bank has received the money on 5th April. On that check, my bank has received the money on 5th April. Even my bank people also, they will do plus. In passbook also, they will do plus in my bank balance. But that they will do on 5th April. I done on 29th March, they will do on 5th April. So if you see on 31st March, your cash book and passbook balance will not tally. Because till 31st March, entry is there in cash book, but entry is not there in passbook. So obviously this balance will not tally. Again, this is because of which difference? Timing difference. So timing of recording. Once you deposit the check, you do the entry in cash book. But when the passbook will do the entry, when money is collected on the check, my passbook will do the entry. So hope these 2 points are clear. Now rest of the things are easier one. First 2 points were most important one. Rest of the things are much easier. Now listen. Point number 3. Interest allowed by bank. Interest allowed by bank. Allowed means bank is giving the interest. Bank is giving some amount of interest to us. Whenever bank wants to give any interest to us, interest amount to us, they are never going to give in cash or something. They will do plus in our bank balance. They will do plus in our bank balance. So once the bank is going to give the interest to us, they will do plus in my passbook. But doubt will arise, sir, when I will do the entry in cash book, I will do the entry in cash book only after I see the passbook. After I see the passbook, I'll come to know, okay, this much of interest is being given by the bank. Then I will also do the entry in which book? Cash book. So till the time you have not seen the passbook, you will never do the entry in the which one? Cash book. So assume that till 31st March, I have not yet seen the which one? Passbook. So it means that whatever the interest is allowed by the bank, it's already appearing in the passbook. Because I have not seen the passbook yet till 31st March, I have not done the entry in the cash book. Then obviously your cash book and passbook balance will not tally. Because entry is there in passbook but not there in cash book. So interest allowed by bank, where the entry is recorded in passbook. Allowed means they are giving the interest. They will do plus in my bank balance. So entry is there in passbook and they have done plus in the bank balance. No entry is there in which book? Cash book. Because we are assuming on the date of comparing cash book and passbook, we have not yet seen the which one? Passbook. So no entry is there in cash book. Next, interest and expenses charged by the bank. Interest and expenses charged by the bank. Now listen what it is. Let's say interest charged on loan taken. Let's say we have taken some loan from the bank. On that they have charged some interest. Charged means deducted. They are taking money from us. They are taking interest amount from us. And how do they take? By minusing from our bank balance. They will reduce by bank balance by interest charged. Interest charged by the bank. Expenses charged by the bank. Expenses charged like ATM card charges, checkbook charges. Let's say you want new checkbook, new passbook, or any ATM card maintenance charges, annual maintenance charges. For that and all, they deduct your bank balance. After I see the entry in passbook, then I will also do the entry in cash book. Assuming that till now we have not seen the passbook, so you will find only entry in passbook but not in cash book. So interest and expenses charged by the bank, deducted by the bank. So this entry is made by the which one? Passbook minus. Charged means deducted minus. They're done minus in our bank balance. So entry is there in passbook and they're done minus. No entry is there in cash book because you are not yet seen the passbook. Next, interest and dividend collected by the bank. Interest and dividend collected by the bank. Now see, listen, you people are aware of this one. Whenever you want to do some investment, let's say whenever you want to buy some shares or debentures of a company, you will open a demat account. So whenever you want to do some investment, you're going to open a which account? Demat account, shares or debentures if you want to buy it. And if you want to buy these shares, first you need to add the money into the demat account. For that, what you will do, you will attach one bank account. Any one bank account, you are going to link it to the demat account, from where you can take the money and you can buy the shares. So once you add the money to the which account? Demat account, from whichever the bank account you have linked, you buy the shares. And that shares will be shown in your demat account as portfolio, which all shares or debentures you are holding. Now, whatever the shares you people are holding, or whatever the debentures you people are holding in your demat account, if those companies pay any dividend on shares or any interest on debentures, then the dividend or interest which you have received on your shares or debentures of the company, where you have invested the money, that money will come directly to the bank account. Which bank account? The bank account which is being linked to the demat account. The bank account which you have linked to your demat account, into that account that money directly will come. So first, who will receive the interest or dividend? So my investment, on that my investment, some interest or dividend income is being arrived, and that money is being received directly by my bank. So first you will find the entry in passbook, and once my bank will receive the interest and dividend income, they'll do plus in my bank balance. My bank balance will increase. Passbook plus. After I see the passbook, then I will also do the entry in cash book. After I see the passbook, then I will also do the entry in cash book. But as if now the entry is done in which book? Passbook plus. So interest and dividend collected by the bank. So passbook has done the entry and they've done plus in my bank balance. Okay, now understand the next one. Direct payments by the bank. Sometimes what will happen? I will give standing instruction to the bank. saying that, sir, whenever any electricity bill will become due, telephone bill will become due, internet charges bill becomes due, or water bill becomes due, I will give instruction to the bank that, sir, directly you only make the payment from my bank account. But how does the bank come to know that how much is my electricity bill is due or telephone bill is due? You might have observed in Paytm and all, when you pay the electricity bill or phone bill or any water bill or something like that, there will be one account ID, a unique number, account ID, customer ID. Once you enter the customer ID, how much money is pending to that particular account in that particular customer ID, what all amounts are pending, that everything will be shown online. So whenever you want your bill payment should be done directly by the bank, directly they only have to make the payment to the bank. Then what will happen? Only one time you have to give the use what you call customer ID or account ID to the which one bank. Through that you have to make the payment. Next time onwards, what will happen? The bank will remember on its own. This is the customer ID of this particular account holder. They will only directly make the payment. But for that, you need to give instruction to the bank. You have to give the approval for auto debit, automatically debit. Bank will automatically debit your account, deduct your account by electricity bill or water bill. That approval you have to give it to the bank. Instruction to the bank. So those are called as direct payments by the bank. So who has done the payment? Bank. So bank has done the payment. So if bank has done the payment, then entry will come in which book? Passbook. First entry is going to come in which book? Passbook. And in my passbook, what will happen? Bank balance will be deducted. It will be minused because the bank has paid the bill on behalf of me. After I see the passbook, then I will also do the entry in which book? Cash book. But as if now the entry is done in which book? Passbook minus. Next, direct payment into the bank by a customer. Direct payment into the bank by a customer. See, sometimes what will happen? Let us say he is one of my customer and he has to give, let us say, 1 lakh rupees to me. And what my customer has done, he directly transferred the money into my bank account through online transfer or Google Pay, Phone Pay, or something he has done. Or let us say directly has deposited the cash into my bank account. So once he directly transfer the fund into my bank account, first entry will come in my passbook. First the money will come in the passbook into my bank account. So first bank people will do the entry. Once money comes to my bank account, my bank balance will increases. So passbook plus, bank people will do plus in my bank balance. After I see the passbook, then I will also do the entry in the which one? Cash book. After I see passbook, then I'll also do the entry in cash book. But till now, as if now, the entry is there only in which book? Passbook plus. Yes, now listen. Dishonor of a bill discounted with the bank. This is important one. Dishonor of a bill discounted with the bank. Now understand what does that mean. Just let us take an example like this. Let us say I am A and you people are B. I am A and you people are B. Let's say A has sold 50,000 rupees of goods on credit to B. A has sold the goods and B has bought the goods. So if B has purchased the goods, then B has to pay the money. How much money he has to pay? 50,000 rupees he has to pay. But B says that, sir, I want 3 months of time period to do the payment. I cannot do the payment immediately. I want credit period of 3 months. After 3 months, I'll do the payment. But A says that, sir, I cannot wait for 3 months and all. I want money immediately. Because I also have to make the payment to my supplier of the goods, to my employees, rent of the shop and all I need to pay. So I want money immediately. No problem, what will happen? A wants money immediately, but B doesn't have money. He wants credit period of 3 months. Now in this case, what will happen? Bills of exchange will come into picture. bills of exchange will come into picture. Now listen, what is this bills of exchange? Bills of exchange is a document in writing. It's a document in writing where A is going to place an order on B. So A will say that, sir, I am going to make an order, I'm not making request. A is going to make an order on B, saying that, sir, you have to pay 50,000 rupees to me after 3 months for value of goods received. Who is going to draw this document? A. And once this document is being drawn and it is going to be signed by the home A, it will be given to the home B for the purpose of acceptance. So what A has done, A has placed an order on B saying that you have to pay 50,000 to me after 3 months. So this order B has to do B has to do acceptance. He has to give the acceptance for this. So what B will do, he will write a word called as accepted on that bill and he is going to sign it. On the document he will write accepted and he is going to sign it. B is going to sign it. So once B is going to sign on the document, for B it's going to become a liability because B has accepted the liability to make a payment. He has accepted the obligation to make a payment of 50,000 after 3 months. So for B it is called as bills payable. For A it is called as bills receivable. And what is the amount of bills receivable is 50,000. Now what A can do is, if he wants this 50,000 if he wants the money immediately, if he wants the money on this particular bill immediately, A will go to the bank. A will go to the bank and he will do the discounting of the bill. A will tell to the bank that, sir, I'm going to get 50,000 after 3 months, but I want money immediately. You deduct 3 months interest. A will tell to bank that, sir, what are the 3 months interest is there, you deduct it. Discounting charges. That interest is called as discounting charges. You deduct 3 months of interest and remaining money you give it to me today only. So let us say what bank will do. Out of that 50,000, 3,000 they are going to deduct. Let's say 3 months interest is 3,000. Discounting charges or interest charges. And 47,000 rupees A is going to get immediately. Now listen. Now what A has done is, A went to the bank and he has collected the money immediately and 47,000 bank has given to whom? A. Now bank has to wait for 3 months. After 3 months bank will go to whom? B. And they will ask for how much rupees? 50,000. Bank will ask from B how much rupees? 50. They given only 47,000 to whom? A. But after 3 months they will ask how much rupees? 50,000. 3,000 is an income for the bank, interest income for the bank. Suppose if B makes the payment of the bill, if the bill is being paid by B, then we say bill is being honored. Bill is honored, paid. Suppose if B doesn't make the payment, if the bill is unpaid, then it is called as dishonor. Dishonored means unpaid. So if B does not make the payment of that 50,000 rupees, then what will happen? Bank is going to deduct 50,000 rupees from the bank account of A. Bank will tell to A that because B is not making the payment, you make the payment of 50,000 to me. Because A came to bank saying that, sir, after 3 months 100% you will get 50,000, please give the money to me immediately. Bank has believed on A and bank has given the money to the home A 47,000, discount charges 3,000. Bank doesn't know what is the financial condition of B, but still bank has given the money to the home A, believing that B will make the payment after 3 months. So bank says that, sir, if B does not make the payment after 3 months, then I'll do one thing. I will take money from you. Bank will take money from whom? A. Then A has to collect that money from whom? B. Now it is A's responsibility that how you collect that 50,000 from B. But bank too will take immediately money from A 50,000. Actually, not only 50,000, 50,000 plus bill amount plus noting charges. Bill amount plus noting charges. See, whenever the bill is going to get dishonored, what the holder of the bill we will do? What the holder of the bill is going to do is he will go to one person called as notary public, a government official, notary public, and bank will tell to the what notary public, sir, B has accepted a bill but he is not making the payment. Then what notary public will do? He will call up to the home B. He will also try once. Notary public will tell to B that what, sir, you have accepted the bill, so please make the payment because 3 months is over, expiry date is over, due date is over. Now you have to make the payment of 50,000. If B makes the payment of 50,000, then well and good. Then notary public will give that 50,000 rupees to home bank. Matter closed. But if B says that no, sir, there is some problem. I was supposed to get a loan, but I didn't got the loan. There is some family issue or personal issue, financial problem is there. So I cannot make the payment of this 50,000 now. So if any those kind of reasons, if it is given by B, then notary public is going to note down that facts of dishonor. What notary public will do? He will write down the facts of dishonor. What is the reason the dishonor has happened? Why B has not made the payment? What all reasons B has given? That everything is going to write in a sheet of paper. For that, he is going to charge some nominal amount. Notary public is going to charge some amount for that. Let's say 100 rupees he has charged amount. And who has to pay that 100 rupees? The person who is holding the bill, he has to pay the 100 rupees to the notary public to note down the facts of dishonor. That is called as noting charges. For noting the facts of dishonor, some charges, 100 rupees. Now what bank we will do? Bank will take 50,000 plus 100 rupees, 50,100 rupees from A. Because this 100 rupees charges has happened not because of fault of bank, it is because of fault of B. So bank will deduct 50,100 rupees from A's bank balance, and A has a right to recover 50,100 rupees from whom? B. So now understand that. Now understand from A's point of view. A has done the discounting of the bill with the bank, but that bill has become dishonored. Then in that case what will happen? Bank will deduct the money from the bank account of A. Bank is going to deduct 50,100 including notice charges from A's bank account. So think from A's point of view. First entry will come in the passbook of A. Think from A's point of view. First entry will come in the passbook of A minus they'll deduct the bank balance of A by 50,100. Who will deduct? Bank. After I see the passbook, I'll come to know, okay, the bill which has discounted has become dishonored. That is the reason bank has deducted the money. Then I will also do the entry in cash book. But first the entry will come in which book? Passbook minus. Next, bills collected by the bank on behalf of the customer. Bills collected by the bank on behalf of the customer. Now see, take the same example. Let us say whatever this bill is there with A of 50,000 rupees, bills receivable of 50,000 rupees. Let us assume A doesn't want money immediately. A doesn't want any money immediately. A can wait for a time period of 3 months, and after that he will collect full 50,000 from B. Now in that case what will happen? A will send this bill to the bank for collection. A is going to send this bill to the bank for collection. See, many times what will happen? If this bills of exchange, if you keep it at business place only, let's say there is a bills of exchange, bills receivable of 50,000. If I keep it in my business place only, may be possible some misplacement can happen, or it may be get torn out. or some damage can happen, or somebody may can steal or something, theft happened. So to avoid all these problems, misplacement or toner out or something like that, best what we can do is A will send this bill to the bank. A is not telling to bank to give the payment money immediately. A just telling to the home bank, sir, you keep this bill with you. And on the due date, bank will tell to you, on the due date, what bank we will do, bank will collect the money on that particular bill and they'll do plus in the bank balance of which one, A. So what A has done is A has sent the bill to the which one, bank for collection. So bank will wait till the due date. On due date, bank is going to collect the money on that particular bill and they'll do plus in the bank balance of A. And after A see the passbook, A will come to know that, okay, what are the bill I've sent to the bank for collection? The due date has came and bank has collected the money and they're done plus in the bank account. Then A will also do the entry in the which book? Cash book. Actually, A bank will charge some fee for this. Bank is going to take some commission for doing this work. Let's say out of 50,000 rupees, 1,000 commission bank has taken. So 49,000 rupees they will do plus in the passbook. Who will do? Bank. And after I see the passbook, same entry will be done by whom? A also in the cash book. A will also do plus 49,000 rupees in the cash book. But after seeing the entry in the passbook. So here point is what? Bill collected by the bank. On behalf of the A, bank has collected the money. So first entry will come in passbook plus. After I see the entry in passbook, I will do the entry in cash book. So as if now entry is there in passbook plus. Now understand this last important point. After that, just small two things are there, 11 and 12. Now understand, check deposited into bank but dishonored. Check is being deposited into the bank but it has got dishonored. Okay, see with an example, let us say I have to get 50,000 rupees from you. You issue the check, I receive the check and I deposit the check into bank account. When I go to bank and deposit the check, first I will do the entry in the cash book. The day when I deposit the check, first I'll do the entry in the cash book. So in the cash book, what I will do, plus 50,000 in the bank balance. So on the date of depositing the check, I will do plus 50,000 in the cash book. Now the check has went to the bank. My bank has given that check. My bank has presented that check to your bank for payment. But let us say you don't have the money in your bank account. So if you don't have the money in your bank account, then I will not be able to get the money on that particular check. Your bank will not be able to make a payment of 50,000 to my bank. It means check has bounced, check has dishonored, unpaid. So what has happened? Your bank has not given any money to my bank. My bank has not collected the money. So no money will come to my bank account. But still what my bank people will do? What my bank will do is, in passbook they'll do plus 50,000. First they will do plus 50,000. Why? Because I deposited the check. Because I deposited the check, they will respect that and they'll do plus 50. But ultimately they have not collected any money on that particular check. So what they will do? Minus 50,000. Because the check has got dishonored. They'll do plus 50. Why they do plus 50? To respect that you have deposited the check. And immediately, once they do plus 50,000, immediately they'll do minus also how much? 50,000. Because the check has become dishonored, unpaid. So ultimately you may say that plus 50 minus 50 answer is 0. It's like nothing done in passbook. See, this plus 50 minus 50 ultimate answer is 0. But it is necessary to do that because it's a proof of dishonor. Later on, after 1-2 months, if I go to bank and I tell that, sir, I deposited check, what you people have done? You have not collected the money, you have thrown away, or that check has been misplaced by you people, or you have not considered at all? Bank say, no sir, you see the passbook, we have presented the check for payment, but check got dishonored. That proof also you can see in the passbook. That's the reason they'll do plus 50 and minus 50. Plus they'll do for deposit, minus they'll do for dishonor. Now you understand, cash book also done the entry for depositing the check, passbook also done the entry for depositing check, so no problem in depositing. Plus 50, cash book passbook entries will tally. Cash book passbook entries will tally. We have problem only for dishonor. Who has done the entry for dishonor? Bank. Who has done the entry for dishonor? Bank. Minus 50,000 is for dishonor. So check deposited into the bank, but it has got dishonored. So dishonor entry who will do? Bank. In passbook they'll do minus. After I see the passbook that they are done minus 50,000 for dishonor of the check, then even I will also do minus 50,000 rupees in the cash book. But after seeing the passbook, even I will also do the entry for dishonor in cash book. But we are assuming that we have not yet seen the which one? Passbook. If you have not yet seen the passbook, you have not done any entry for dishonor in cash book. Dishonor entry is available only in the passbook. So check deposited into bank but dishonored. Who has done the entry? Bank. And what they have done? Minus 50,000. Where the entry is not recorded? Cash book. Because we are assuming we have not yet seen the passbook. So these all are the reasons why your cash book balance will not tally with the passbook balance. Okay. And as I told you, even if you do some error in the cash book, your cash book and passbook balance will not tally. And even if you do some error in the passbook, that also a reason why cash book and passbook will not tally. So error in cash book and error in passbook. Any of the book if you do error, or in both the books if you do the error, then also it is possible that your cash book balance, bank balance as per cash book, will not tally as per bank balance of passbook. So totally we have studied 12 points. What all reasons are there for differences in the bank balance? Some of the items that frequently causes a difference.